Good evening, TheoTrade. This is Corey Rosalum, and you're watching a very active TheoTrade video update for the 26th of July here in 2022. Let's get started. We have earnings coming out right here for Google and Microsoft, just to get those started. Not to mention, not to leave the other stocks behind it, but Mondelez, Texas Instruments, and Visa just had earnings. We'll cover that, and we'll cover the Fed funds rate and the Fed meeting, which will take place tomorrow, Wednesday, 27th of July. Let's start the video with Google. When you're looking at what the earnings are, always take a look at that expected move for your earnings play. That could be the first step in your process if you have trades or are managing any open profits or losses in an earnings move, or looking to put trades on after the earnings play. So before the bell or before the close, we had 100% implied volatility, translates to about a $7.6 up or down move. We're going to look at the stock in a moment, but that $7 up or down move means that it has an expected play either to about the 112 level or down off the chart under $7 to about the 98 per share level. Did the stock move within that bound? It did, at least after earnings. What we're looking at here, we'll take this off the chart and just look at the price of Google shares. Did it move in any significant way after the close? Not necessarily. Not necessarily too much. It did move up to the 110 per share level and has traded back down. That's actually a volatile movement after hours. So that 110 per share, despite, this is where the confusion always takes place, expected sales growth to slow. We had Walmart earnings. We had Walmart guidance, I should say, that said their revenues are slowing, and other things in the news of the morning session, and the movement after hours and how that will play into Wednesday's session. Again, looking at Google shares, it had, roughly speaking, a $7 expected move. Let's see how that's playing after hours. Again, there's the move after hours, and again, that level was roughly a 111. Just about hit that, but has backed down from it. On Microsoft, another big tech name, and we'll take a look at it next in terms of stocks that had earnings after the bell. There's the news event on Microsoft, revenue, earnings per share miss, all the details that come from the news event after the earnings have taken place, and what may happen after hours and before the market opens on Wednesday. It had a 75% expected, or 75% implied volatility, translates into a roughly expected move of $13.70. Has Microsoft shares traded within that $17, roughly speaking, or sorry, within that $13 expected move? Not yet, not much, especially after where we are about an hour after the close. And that expected move right there from Microsoft, again, about $14 up and down. These levels can and might very well come into play in the morning or the afternoon session of tomorrow. These are just bounds a market price can travel toward or move on any particular intraday reversal up away from it. And that was roughly about 237, 238 per share. We saw the initial snap movement right after the earnings down to 243, so within that bound, but it did recover and is trading currently about where Microsoft shares closed. The upper move would be also $14 to about 265.50. Now that's the thought process and how the plays would go into the post-earnings move. Within Mondelez, we won't go through the exact price levels, but you can take a look at the 55% to a 2.5 expected move. At the moment, we're within that bound as well for Mondelez. Texas Instruments, of course, you can always look at the news tab right here. Its expected move is roughly $8.84, and we see that potentially playing right up to that $8.80 and then back down. So Texas Instruments, again, had its earnings play, its gap, or at least initial move off the earnings per share and the revenue, and this one actually the revenues rise, and the guidance comes in as well. You may be able to take a look at individual stock performance or individual what the earnings are, and you'll have those clearer for the next session. But that's just one discussion of tonight's video, the earnings, and earnings in big stocks in major sectors. We haven't even talked about some of the others that moved this morning, and they included General Electric, General Motors, Coca-Cola, Triple M, McDonald's, UPS, and Raytheon. Those as well will have their news event, what the stock, the earnings guidance, any information on a company-specific basis. All the earnings behind us into Wednesday's session, we have the Federal Reserve. So the Fed funds rate will be adjusted on Wednesday's session, probably 75 basis points. That would play into not only the equity market, but the bond market as well, looking at TLT. Of course, ZN, which is the 10-year Treasury note. Will it pierce through this 130 or 120 and move higher? Or have we found our ceiling and will turn down from these resistance levels? ZB is a 30-year bond, and also in focus is TNX. And of major focus here is that 30 actually is 3% in the 10-year Treasury note, and we see the 10-year note Treasury index, the yield, under the 3% boundary. And that's what the Fed raising rates. If you are ever curious about what the probabilities are as they stand, the Fed Watch tool from the CME Group, this is what we reference a lot at TheoTrade, just looking at what the probabilities are. How might we look at this in a quick reference? The current Fed funds rate is, roughly speaking, 150 to 175, and the probability of a 75-point basis hike, is 75%. Confusing. But to move the Fed funds rate from roughly 150 to 175, that's the range, target range, to 225, 250, that's a 75 basis point hike or raise in the rate. The market is giving that a 75% chance. But for a full hike of 1 point or 100 basis points, that has a 25% chance. So says the Fed funds rate tool. And last time we did see that statistic, so at least the model suggests a higher than expected rate hike, and that is, for lack of a better term, better or worse, what happened. The Fed funds rate tool was helpful to guide how the Fed acted. It was a 75 basis point hike. The probability is for the 0.75, but of course with anything, earnings included, the market prices in what they think will happen. Of course, the funds and the traders price that in. Any surprises, meaning 1% or 100 basis point move, or maybe a 50 basis point move, that probably will not happen. The conversation and the market reaction will come down to whether the Fed raises the Fed funds rate 0.75, again, the probability suggests that, or a full 1% hike in the Fed funds rate. That does not necessarily translate directly into the 10-year Treasury note or the yield, but it does affect the Fed funds rate, and that interest rate does play into the broader or the longer dated debt or bond or note markets. So that's where we are, and we haven't even gotten through the last part of the week. So just in terms of the video, keeping it brief, earnings clearly in focus, and coming up after the bell and tomorrow's session before the bell is T-Mobile, Bristol Myers Squibb, Boeing, Kraft Heinz Foods, General Dynamics. But after the bell, after the Fed, and after the market closes on Wednesday, we're going to see earnings from Meta, stock formerly known as Facebook, Qualcomm, and Ford. And after that, we'll see earnings in other major stocks as well. But we'll cover those a little later in the week. For now, the focus is going to be on these earnings plays after the Fed, earnings plays before the market opens, and for the sake of tonight's video, the reaction immediately after these earnings announcements, and how all of it plays into the broader picture. And the broader picture of the S&P, at least, we'll take a look at the SPX, is and remains a downtrend, is and remains a bear market, and is and remains a recession. All that's in play, all those words mean similar things, and it just means probability of lower stock prices ahead. All of the focal points would be on 4,000 in the SPX. Of course, NASDAQ price levels, that would be just shy of 13,000. In the Dow mini futures, 32,000. In the Russell futures, the small cap index, about the 1850, maybe even the 1900 per share level. And a quick note about crude oil, which continues a sideways trading range. It is at the moment under 100. We'll keep watching that price point. And in gold, key pivot is going to come off this 1700 per ounce level in the gold market. Underneath that opens up a further sell side pathway, but that is a very good level to start working longs or bullish trades if you wish to play a potential bounce or rally, at least off a price pivot point for the gold market. Again, a lot of things happen this week. The goal will always be to protect yourself. Think about the risk before you think about the potential reward. Always have your hedges in play. Vertical spreads work very well. Anything else that would keep you hedged and defensive and protective in so many news events, earnings, Fed, and more in this week. As always, be careful and safe. This is Corey Rosen with tonight's video update for July 26th, 2022.